Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this channel, we look at all sorts of dividend companies that are great to invest on, in my opinion. So if that's something you're interested and you want to learn and see what types of dividend companies to possibly invest on, so you definitely want to hit that subscribe button. Do me a favor, hit that notification bell so you don't miss out on the videos that I put out. As always, please remember that this is not financial advice. I'm not a financial advisor. With that said, enjoy this video. So in this video, we are going to talk about a dividend company that has been given dividends for the past 30 years. So without any more delays, let's take a look at this company. So this company is Merck. The ticker symbol is MRK. This is a company that does medicine and vaccines for many of the world's most challenging diseases. They are the forefront of research to prevent and treat diseases. So if you look at their website, you can see some of their pipelines. So they have like 71 programs in phase 2, 25 programs in phase 3. So they go big. They have all sorts of pipeline that deals with schizophrenia, depression, HIV infection, and then you have your Rona that they also work on. Yeah. Now, if we take a good look at Simply Safe Dividend, looking at their dividend safety score, they rate it as 99, which is very safe. The dividend yield of this company is 3.58. Market cap's about 195 billion. Now, if we look down to the key metrics, you can see payout ratio is 44%. I always like to look at what do they do during a recession. So they maintain their dividend. Again, it's been paying dividends for the past 30 years. Now, looking at the dividend growth streak, not as impressive as I would have liked. As you can see, the last 20 years it's only 4%, which is slow. Last 5 years it's been an average of 6%. So the thing I like about this one is that it has an uninterrupted for 30 years. However, the dividend growth streak has only been 9 years consecutively. So you can see from the chart over here, it's kind of just been flat, and then 2011 it just shot up, and then slowly but surely it's going up. So payment details you get frequently, which is the annually, in the months of January, April, July, and October, with the annual payout of about $2.76 shares. The ex-dividend date is the 7/14, which is past, and then you get your payout of January 7. And now if we look down to the valuations, you can see the stock may be undervalued. Going down further to the financials, you can see one of the things I always like to look on is the return on investment capital. So you can see 8% is above, so looks pretty good. Return on equity, 10% is the preference for most companies, so that's good. Now if we go to CNN Business, based on their price forecast, you can see a high of 115, a medium of 93, and a low of 70, with the analysis recommendations of 12 buys and 10 holds and 3 outperform. Now going to Webull, based on their analysis, they rated as a buy based on 28. You got a buy of 46%, a strong buy of 17%. Looking down at the price target, you can see about 115. 92 is the average and 70 is the low. Now let's take a look at bar chart and compare. So again, their price target rated as a 110, the mean is 90, and the low is 70, with the analysis rating of moderate buy based on 17 analysis. You can see 3 months ago it's pretty much the same based on 11 analysis. Now if we go to the ratings breakdown, currently you got 17 of them, says 9 holds and 8 strong buy. 3 months ago it's kind of like the same, 5 holds and 6 strong buy. Yeah. Now if we look at TipRanks, based on their analysis, they rated it as a moderate buy based on 17 ratings. You got a mixture of 8 buys and 9 hold. Their price target is the 90s with a 17% upside. Now their 12-month forecast rated as a high of 110, 90 is the average, and the low of 70. Now if we look down to Yahoo Finance, as you can see, based on the earnings, you can see it's kind of like a mixture, 2 misses, 1 met, and 1 beat. Going to the financials, you can see the revenue has been steadily going up since 2017. So you can see 2020 it's about 49 billion, whereas in 2017 it was 40 billion. Now looking down to the trends, you can see still a mixture of between a hold, a buy, and a strong buy. Their rating is between a buy and a hold, and then right now the average is 92 and the current is 77. Yeah, so pretty good amount if you're gonna buy it right now. It's pretty cheap. So now looking at the chart, let's compare that with the S&P 500. You can see it's underperforming. It's not as it was kind of mirroring it, as you can see, when 2018, but then as you go past 2020, you can see the S&P 500 is doing much better than Merck. Now if we look down to Robinhood, at the time of this video, it is at 77. For the week, it's up only 0.46. For the month, it's up 4%. For 3 months, it's down almost 7%. And then for a year, it's down almost 4%. And for 5 years, it's only up 30%. So now looking down to their rating based on Robinhood, they rated as a buy. 60% said it's a buy, 40% said it's a hold. You know, so what I like about this is it's a great company to invest on. You know, for me, is it a buy or sell? At this point, I would buy it, but it would not be a major player in my portfolio. I think I'll probably just, if I was gonna buy this, I would just buy like 10 shares, 15 shares, maybe 20 shares, because I would rather put the money in Johnson & Johnson, but that's just me. So if this is something you're interested, definitely do more research about it. Definitely a great stock to invest on. However, for myself, I would stick with Johnson & Johnson. All right, guys. Thank you so much for watching. Don't forget to like and subscribe if you haven't done so. There's also other videos if you want to take a look at other dividend stocks that you're probably interested in. As always, please remember, please be safe out there. Stay cool. Keep investing. And I'll catch you guys on the next video, all right? Take care. Aloha.